If you've seen my previous videos, you will know that I studied with Warrior Trading for about 1 year and that I originally started trading US stocks until I switched to trading Forex, even though I'd never studied Forex before. Why? This is a question that I've received quite a lot from different subscribers and that I'm going to answer more in this video, so stick around. Hey everybody, I'm Emily from the channel Mindfully Trading. If you're new to my channel, I share my journey with you as I grow and develop as a trader. And before I dive into today's video, I just want to clarify with you guys that this isn't going to share any kind of personal experience that I had with Warrior Trading, with the education and with my learning experience. I have created a separate video where I share a review of my experience with Warrior Trading, so I'll include a link above for that if you want to check that out. Why don't I trade like Ross from Warrior Trading, and why don't I trade US stocks even though that is what I learned? Let's break it down. Firstly, let's cover some logistics. From my experience, trading US stocks from the UK is very, very tricky, especially with a small account. My only option for brokers are based in the Bahamas, where I have to trust these overseas, often unregulated companies, which I find very risky. In addition, I will get charged monthly commissions, monthly software fees, different account fees, and trade commissions, which all take their toll on a small account. Learning to trade is tricky enough without the added obstacles of brokers and fees, right guys? Before I explore the reason why I don't trade Ross's strategy, let's first just clarify the different markets. So Ross targets small capital US stocks, which are generally gapping up on news, where he rides the momentum. Whereas generally without news, small caps have small cycles of movement and limited profit potential. In essence, Ross's strategy targets these huge spikes in volume and attempts to ride the waves of the move. Whereas with Forex markets, we are trading currency pairs rather than stocks. So generally currency pairs, especially the major currencies, are always moving, which is why Forex is known to be volatile. But this volatility provides large cycles of profit potential. Let's go back to small caps and Ross's strategy in particular. So when a stock is gapping up on news, usually this involves buying the stock when it is really already high up in its move and generally quite extended. I found that this can be extremely emotional, as it's very easy to slip into FOMO, the fear of missing out, especially when you're having to make such decisions in a very fast-paced environment. I found that it's like trying to jump on a super fast moving carousel. It's so easy to just fall off. Secondly, I found that this approach to trading makes it really difficult to manage risk effectively, because if you're buying when a stock is already really high up, then where's the best place to place your stop loss order? I found that trading small caps is not the easiest way to trade for a beginner. It can be a very stressful experience, and it's just not a great environment, especially as a beginner trader. Personally, I prefer a trading approach that focuses on managing risk and utilizes technical analysis, rather than trying to make fast profits from risky entries on extended moves. Let's explore the concepts of risk more closely. From my experience, a lot of people, myself included, get drawn into Ross's style of trading US stocks under this idea of making crazy amounts of money in minutes. Just how often do you see a video Ross has uploaded where he's made $30, $50, $100,000 in merely minutes in one day? But these numbers are very misleading. The reality is, for a beginner trader, especially with a small account, is that it's just not going to happen. As we all know, trading is not a get-rich-quick method. It is possible to make huge amounts of money trading, but to do that whilst managing your risk effectively, you do need to have a large trading account, which of course Ross does have. You can of course trade large positions even with a small account if you find a broker that provides margin, but this is a very dodgy, risky approach because it generally means that you have to take large risk, and although you might have the odd large winner, it probably won't be long until you have more larger losers that draw your account down until ultimately your account's gone. I'm not saying that trading Ross's strategy and US stocks is wrong, and there are people who are successfully trading this way. But for my circumstances, I found that the more effective way to trade in, whilst managing risk and using a small account, has been to trade the Forex market. I have created a separate video which elaborates a little bit more in detail on why I've switched from trading stocks to trading Forex, so I'll include a link if you want to check that out. I hope that you've enjoyed this video and that it's answered some questions on why I've chosen not to trade Ross's strategy, even though I have learnt from him for over a year. If you have enjoyed it, be sure to hit that like button and subscribe, and I'll catch you on the next video. Thanks guys. Bye.